Hey guys, and welcome to today's video. So in today's video, I'm going to be going over the idea of the fair value gap for entries. And if you're watching this video, you can watch series one to be able to get a better understanding of where we're coming from. I'm going to try and do a little recap as fast as possible. But I just want to put something very straight as regard the questions I've been getting over and over again. Is the fair value gap also the imbalance? A lot of people have the idea that the fair value gap is an imbalance. So, and in most of the answers I've given, both on my YouTube video, even in the series one, and also in most of my comment sections, I've answered that the fair value gap is not the imbalance. And the imbalance I'm actually referring to is a series of up close candle and inefficiency in price like this, also known as the liquidity void. So if I'm to zoom it out, you see what I'm talking about right here. And see, you get a series of up close candle or a series of down close candle. This is an imbalance. You understand? It's an inefficiency in price where price only close in one direction. You understand? So, but the other name for it is known as the liquidity void. You understand? Or when the fair value gap can also be viewed as an imbalance, or the area where, or the reason why the fair value gap can also be viewed as an imbalance is because when you draw out these areas in price, like this low right here, using the diagram I've already outlined right here, when you draw out this particular area in price, this particular void, you can see that price also traded in one direction. You know what I'm saying? So because of price traded in one direction in this place, this can also be viewed as an imbalance. Why? Because imbalance actually mean an inefficiency in price when price only traded in one direction. You know what I'm saying? So I believe this is what most of you asking this particular question, maybe on my comment section on my email, as regard the imbalance and the fair value gap. This is where I believe you guys actually got the idea from, and you are not wrong. You know what I'm saying? But the only reason why I've been answering it differently is because I don't want you to be able to marry the same ideas together and create confusions in your trading. You know what I'm saying? So that's why I'm giving a clear distinction between the imbalance and the fair value gap, so that when you see the fair value gap, you identify it just as a fair value gap. But this area, this little area from this line to this line in this particular fair value gap can also be viewed as an imbalance. Why? Because price traded in one direction. Why? Because markets is actually moving to the upside or the buy side, seeking one single component called liquidity. And in this components called liquidity, it is branched into two. What creates the market structure you see is price reaching for liquidity areas in terms of liquidity pools and also imbalances. And now under these imbalances, you know what I'm saying? You have the fair value gap and the liquidity void. But the word imbalance is used generally for the liquidity void. You know what I'm saying? So that's why in most of my videos, I'm trying to put a clear distinction in order not to create a confusion with the liquidity void and the fair value gap. So I would like you to, going forward on this channel, except if need be, you want to say, or I have to explain something, I would like you to be able to identify the liquidity void. You want to say, when I mean liquidity void, series of up close candle like this, I want you to see it as an imbalance. You know what I'm saying? Then also you can also view the fair value gap as an imbalance, but only this shaded area. You understand why? Because of this this little gap in price, also known as the void. Why? Because there's also an inefficiency in price where price also traded in one direction. So that's why it's actually passed as an what, as an imbalance. So I believe I've been able to create a clarity and a distinction. I just don't want to create a confusion. So that's why my answers has been straightforward all the way, all along. The fair value gap is nothing like the imbalance. But just for for you to better understand what imbalance is all about, so that's why I have to bring back, like, just to reiterate what I said before, or in the answers I've given before. I just have to take some of them back to be able to make you understand what the imbalance actually is. You know what I'm saying? It's just an inefficiency in price where price trade in one direction. So this area in price in this particular fair value gap can be passed or seen as an imbalance. You know what I'm saying? Why? Because price traded in one direction. You know what I'm saying? But I will advise and I would like you to view it generally as a fair value gap. Why? For your understanding, so you don't confuse these liquidity voids. You know, or this liquidity voids here, and you can see something clear like that here. You don't confuse these things, you know what I'm saying, in price, you get what I'm saying, you don't confuse them unless you can be able to identify this as liquidity void and this as a fair value gap. Then both of them you can bring them under the class of what, as an imbalance. You know what I'm saying? But the general term both on YouTube here, everybody classifies um um ev- generally everyone classifies this series of up close candle rather as a what, as an imbalance. But also for those of you asking me questions, I'm answering that question right now. Year two is also what, an imbalance. So I believe we'll be able to find a common ground. You know what I'm trying to say. So let's just continue with the purpose of today's video. So how can we find an entry? You want to say another variation on how we can find an entry using the fair value gap. So if you see this shaded area outlined right here, so this area is a fair value gap. We have the one, two, and three. You want to say, you see this low D gets to this particular high right here. You want to say, so price started coming in for it. You want to say, so mind you, in the previous video I said all you want to see, if I bring down this area, all you want to see price just retrace above this particular high over here in terms of looking for bearish moves using a fair value gap. You want to see price just retrace a little bit above that high and come downwards. You'll get what I'm talking about. So but in this variation now we can see that that didn't work, because if I zoom in also, extending the chart for clarity, we can see that when price actually came below this low right here, you understand, with this particular move downwards, it responded a little, but the move was not this explosive move higher. We saw price still coming down for lower price. What was it reaching for? It was reaching to fill in this fair value gap completely. You understand why? Because as I explained earlier, this fair value gap is also viewed as an imbalance. It's an area in price, you understand, where price only traded in one direction in the marketplace. So price came in to fill that particular area, and it did that at this particular black or down close candle rather. You understand? You can see that price filled in the void completely. You get what I'm trying to say? So this will be the second variation for you entering using sorry, the second variation you can use as an entry using the fair value gap. The second way you can other example, sorry, rather, is what we have right here. You understand? Let's see more examples rather. You can see that price came down also here and filling the void here completely. You can say it filled in the void completely. So this particular high failed to get to this low. So you can see the way price came in, filling the void of the fair value gap completely, tapping on this particular high right on this particular candle right here. So there can be another entry for you using the fair value gap, which is the same variation I'm talking about. You get what I'm trying to say? So if price had come lower for this particular price, it will be filling in this void. So this is an imbalance in terms of liquidity void. You know what I'm saying? I hope we're not getting confused right now, or we're not creating a confusion. If you don't understand anything, you can leave the thoughts in the comment section. I'll be sure to answer you. You get what I'm talking about. So price came in right here, filled in this particular fair value gap from this low to this particular high right here. You can see the low of this particular candle hitting also the high of this particular candle, filling the void completely. And since then, we saw a quick response in price higher. You get what I'm trying to say? The next example we're going to look at, still using the same variation, is right here. You can see price traded lower into this fair value gap. Mind you, this particular candle came into this fair value gap here, one, two, and three. And also, if you pay attention, these are series of up close candle. So this in terms viewed as an imbalance in terms of a liquidity void. But within this liquidity void, also known as an imbalance, we can find a little imbalance known as a fair value gap. I don't know if I'm creating a clear distinction with what I'm saying. I just believe I'm doing that. You understand? So we can say that price came into this particular fair value gap. The fair value gap is one, two, and three. Price came right here into this fair value gap, created a response in price, but was not efficient, just like this one. And price later on came in to fill in that fair value gap completely. You get what I'm trying to say? So this is the second variation you want to look out for. You know what I'm trying to say? When trading the fair value gap for entries. You know what I'm trying to say? Then second, next example you can also see in price is also is right here. You get what I'm trying to say? You see the way fair value gap reached below this low right here on this particular candle. but failed to respect it and came down for deeper prices. You understand? Filling the fair value gap completely. What's the fair value gap here? One, this candle here, which is like a doji. For those of us that understand candlestick pattern, one, two, and three. This particular high failed to get to this low right here. And you see price came in filling that particular area completely right here. You get, and since then we saw a quick response in price higher. And I believe this should be our final example right here. We can see in this series of up close candle right here, which is a liquidity void and also an imbalance too, we can see that price came in, you know what I'm trying to say, would have stopped at this low and responded higher, but came deeper for um um deeper prices. You get, filling this particular fair value gap within this liquidity void completely. You know what I'm saying? You can see that it came right into that area, but didn't get to this high completely, but at least it filled it up to 90%. You get, and since then we saw a quick response in price higher to the upside, but price started coming down for lower prices. But mind you, it didn't come to fill this void completely. It just came for the liquidity below these lows right here. You get, that was what this particular piece of price action. So going forward in price, when you want to trade using the fair value gap, these are the variations you want to look out for. You want to wait and see price go deeper. You want to say, let me go back to that diagram I pointed out, I created right here. So you want to see price come in this case, you want to see price either tap above this high here. Let me say, for instance, you're looking at a bearish fair value gap. You want to see price tap above this high and respond. So with the response in price, that's what you're going to use to enter. You're going to say, or you want to see price come to this particular area, filling this inefficiency in price. When I mean inefficiency, which is also an imbalance, is right. This is what I mean. This inefficiency right here. So if I'm to color that with the right color, for clarity, this is how it look like. So that's B. This is the area I'm talking about, this particular area. This is the imbalance within the fair value gap. You know what I'm trying to say? So this is what it is right here. So you want to see price for come for either this high or fill this void completely. Then the rest, with the response in price you see within this area, that's what you're going to use to get in as your entry. Don't worry, in the part 3 of this fair value gap for entry, part 4, I'm going to be showing you the kind of responses you're going to see, and I'm going to give you in the context to which you're going to find this kind of response in price. You're going to say, but for the terms of variations, this is one variation. The second variation you want to look out for when trading the fair value gap for entries. So I believe I've been able to establish a context, establish a point on this particular series. um you can watch the first one to get where I'm coming from. For those of you that's just starting this series with us, then if you have any question, or maybe you are still confused as regard the imbalance or the fair value gap and all those things, you can leave your thoughts in the comment section, and I'll be sure to answer you appropriately. You know what I'm trying to say? And I just felt like I've done justice to the imbalance as regard the fair value gap. But if not, still leave your thoughts in the comment section. Be sure to get back to you. So if you found value in today's video, you can hit the like button, subscribe, and see you in the next video.